So it's been said that there are two certainties in life, right? Death and taxes. And I will say number two is actually optional, right? And the reason I say that is because I was able to do this. I was able to reduce my taxable income. I was paying a 25% taxable rate on my income as a high earner, over $200,000 a year, and I got it down to about a 1% per year. Well, how did I do that? Well, I'm going to get into that in this video, and I'm going to talk about several tips you can do as your year-end tax plan, and maybe some things you can do right now that will help you to pay less taxes for this year. So let's jump in. Let's go for it. Here we go. Okay, so quick disclaimer, I am not a CPA, I'm not a tax professional, I'm not your tax professional, so go seek out your own professional advice. These are just my opinions, this is for education only. So we're gonna go into 3 easy steps, got a great quote for you at the end. The first thing is how to reduce your tax bill. What are some quick ways to just from a top level, how do you do that, right? So the easiest way to do that, they've said, is to make more is to pay less, right? If I'm making $200,000 per year and I'm paying 25 or 30% in taxes, my take home maybe would be 150 or 140K a year, right? And I realized if I could pay less in taxes, I could make more just simply by doing that. So some options to do this. Obviously, you can spend less, but when it comes to taxes, that doesn't necessarily help you. You can use a retirement account, such as a Roth IRA, an IRA, a QRP is an awesome vehicle that basically allows for you to avoid taxable income inside of a retirement account. There's a really sneaky tax the government gets you inside of a retirement account if you're buying real estate, so that's a unique way. You can increase your giving. There's all sorts of awesome causes. I'm going to talk about one cause that I absolutely love that's really changed my life. I'm going to share about that. Depreciation, you can use depreciation from real estate expenses. Again, these are paper losses. It's not that you lost money, it's just that you, on paper, have shown a loss so that you can basically be able to use that against your income. There's something called the real estate professional designation. If you search the IRS real estate professional, there's all kinds of stuff that comes up. That's something that I've been able to do, other real estate professionals have been able to do, and potentially pay zero or close to zero taxes. So that's an awesome thing to look into. I highly recommend everybody looks into that for them, or maybe even their spouse, to be able to do that, because if one of you qualifies, you can be able to use that and be able to reduce your taxes. There's things in the energy space that have to do with oil and gas and carbon that allow for credits. So those are just some high view things you can do or look into to reduce your tax bill. I'm now going to get into some real specifics of how you actually do that. So how do you offset gains with losses, right? And I'm not taking you would actually lose money, but just that how do you use these paper losses, right? There's this idea that on paper or an investment gives you a certain amount of losses even though you didn't lose money, which I think is a pretty cool thing, right? You didn't actually lose the money, but on paper it says you lost money. It's kind of cool, but it's something with the tax code. If you know how to basically crack that code, you can get to where you can actually take advantage of the tax system. So when you sell a house, let's say you have a house that was an investment property that you sold, you made 100K on it, and if you would basically be paying on those gains for 100K unless you found some losses to be able to cover that gain. Now again, I'm not a CPA, so talk to your CPA about this, but if you had some, could you have any other losses that you could use to kind of offset that? So, is it possible that you could sell some stocks? Stocks are down, but could you sell them and then buy them again, and maybe you'd have a loss that you'd be able to lock in and be able to use against some of those gains? Maybe that's a possibility. Maybe for one of our deals, like these multifamily deals, you could, invest in a deal and then you get a bunch of depreciation. You get 70 to 90% or more depreciation in year one that you can use against your income or some other investment income to be able to offset that. My friend Eric Shelley has this in the energy space. We talked about the energy space, that there's things around oil and gas and solar and other things that the government provides a lot of incentives around this to help reduce your taxes. So Eric Shelley, he has this thing called carbon capture that helps work with oil and gas to help capture some of the carbon that's produced through that. There's a lot of benefits and a lot of actually potential W-2 or 1099 income can actually be reduced through investing in that, which is really unique. I think those type of investments, there's quite a few out there where they actually can reduce ordinary income even if you're not a real estate professional. So that's something, I call that kind of the holy grail of when it comes to tax reduction or investing. So that's really important. Like I mentioned, retirement accounts reduces your taxable income, and you don't pay your taxes until you withdraw later. So if you can put in, sometimes it's $40,000 or $50,000 or whatever that amount is per year, you can put in the maximum amount that will reduce your taxes for this year, reduce your income for this year, and then you'll pay somewhere down the road. So that's another way to do it. If you have a Roth IRA, if you make less than $100,000 a year, around there, you can put money into a Roth IRA where you pay the taxes now, but then you never get taxed again later. So some ways you can kind of do creative things to be able to help in the retirement space to be able to make some more money. I want to touch base on this too. This is the idea of really giving back, right? So what does it mean to be somebody who reduces taxes and gives back at the same time? So we know in the US, the tax code basically it gives opportunity for nonprofits to be able to have donations given to them, and then they can use that as a, the people that give can use that as a tax deduction, right? So they use that against the ordinary income. If I give 50K to a cause I believe in, it's a 50K reduction on my taxable income, which is awesome. So I've been able to use some of these strategies I mentioned to 20x my net worth. I have a big why for why I've done that. Right? I haven't just done that so I can live this lavish lifestyle. I really want to make a difference in the world. And one cause that really I believe in is the cause of human trafficking, modern day human trafficking and modern day human slavery. And I didn't realize this at the time, but there are 20 to 40 million human slaves today, which basically, if you look at that, probably 3 times the size of the greater Los Angeles area, which is kind of hard to believe that that's even possible. But around the world, people that are in sexual human slavery, there are people that are in labor slavery, and they would do anything to be free, and they just can't get out of it. And there's a lot of reasons that exist. But I'm involved with this cause called December, and my goal this year is to raise $5,000 to help fight and end human slavery in the world. If you're interested in getting involved with that cause, I'll stick a link in the description below. And so you can check that out and be a part of the campaign that we're looking, and also you get a tax deduction for being involved with that. So whatever cause you believe in, I encourage you to give, to really make it your cause, not just to have and keep and get, but to really enjoy being able to make a difference in the world. Because by doing that, it makes the world a better place, and it will help reduce your taxable income. So anyway, I encourage you to do it. Do it now. Look at it. Check out December below. Find a cause you believe in. Go for it. Anyway, I hope you are able to reduce your taxes to zero. I hope you're able to find the incentives the government puts in place to be able to do the things that they, kind of the agendas that they have around energy or real estate or other things, because it actually is encouraged for you to be able to invest in things that actually reduce your taxes, or to be able to give to causes that you really believe in. I want to share this with you. This is a quote. This kind of goes in what we're talking about, a cause to believe in, from the former Prime Minister of Israel. His name is Shimon Peres. He says, to find a cause that's larger than yourself and then give your life to it. So I hope that you find a cause that is really worthwhile for you. And then I wanted to share this with you. I have some additional things here about the real estate professional. If you're looking to reduce your taxes to zero, there's some specific things in here, kind of how to do that. So check out that video there. And then again, if you haven't downloaded our ebook of how to use inflation to your advantage and not be taken advantage of by it, check this out. This will be in the link below. It's at our website, bronsonequity.com. It's a free download, 50 color pages here. I think you'll love it. And look forward to seeing you on the next video.